To go over like what has been going on recently, I think in the markets, big picture, and how you could have or should have made money from it. How you could have seen a lot of these I've talked in before, but just to kind of show about how it's playing big picture versus intraday stuff. So this was a couple of months ago when you had all the sell-offs. We established the like 280 line, which you can see we kind of went up to and bounced off of once, and now we've got back above it. Orange line is the 200 day. This is the 50-day. It's the simple moving averages. And just wanted to kind of go over, so big picture, and my opinion on long-term investing, if you're just doing it with indexes, it's pretty easy to see whether it's bullish or bearish, and a lot of people use the simple rule, the market kind of follows it, is that a lot of people will, one, just look at whether it's below or above the 200 day. You can see if you did that, you would have been fine through all of this, got out below, which is what caused probably that huge sell-off. You can see we rested on it right there. Would have messed up right there, but then you broke right back below it. And then the second time it went back above it, and it's just kept on going, and that was at like 265. And then most people just would say that this is the death cross, which is when the 50-day crosses below the 200-day, and of course when we did that was when we had that real big break of this and then the downtrend. So if you just use that along with the technicals of seeing that level, and when that broke, that had been established from back there, then you see that this, in my opinion, would have been the reversal of a trend. It bought back in, but really just using the simple moving averages, you don't even need the technicals except for maybe the 280 level. You can see big picture what has gone on and just how easy it was to play this. And don't ever listen to the media and what they say, because they're generally wrong. They said all through this that we were probably, or a lot of them, they said, I think, that a lot of this was going into a recession. Then we started talking about this, and suddenly it's not a recession anymore. Look at the economic indicators. None of them really changed. No reason this should have been a recession, which is what I said from the beginning, is that it seems like a correction, so you can just buy the dip on it. And if you did, you would have made a lot of money. Or if you just used this with the moving averages, then you could have avoided most of your loss. And you either bought back in there, or you're just now starting to buy back in when this happened, and probably staying along for the ride. And then just going over the other thing that I had purchased recently is with the BA, you had the news, but nothing fundamental has really changed about the company. So then you have this technical level that it comes down to right here, 365, and I just bought off of that. And that's pretty much where it stopped at. And now it's starting to go back above it, probably about to break above the 50-day moving average. And let me say the 50-day is well above the 200-day, so overall it's generally a bullish sentiment. But this stock, as far as I feel, I don't see anything wrong with the fundamentals, and so when this happened, it is just a good opportunity to buy the dip because nothing changed about the company long term. I see little possibility that this would affect them negatively in anything except for the press blow stuff out of proportion in the short term. And then with Facebook, really you just had it go up here, pull back. This is about to cross above that, probably why you see that big pop partially. But it's really bounced off the 50-day going back up. For this earnings is one where I had bought options on, and I've just kind of been a little bit bullish on Facebook stock since it's done a break above the moving average there, break above the moving average. It's about to have this bullish cross. But this is just kind of like quickly to show you big picture how a lot of these moving averages can be used, or how I will use them at least, for longer term plays. And it's really pretty simple, and in my opinion it's pretty easy. You should be able to most of the time make money, usually pretty good money, but at least make money on these long-term plays. A lot of them are just easier. You're not trying to predict every intraday movement. And then again, I've just been telling people with tech, so like Amazon for instance, so it hasn't crossed back above with the moving averages, but just saying when it does, you would expect Amazon to run unless the entire market, starts pulling back before it does this. See, there's where you had that cross right there, and it sold off to its low. Now it's looking like it's about to cross, but it hasn't yet. But when that does happen, see, Amazon has a higher beta. Tech stocks in general most of the time do, like the tech index has recently, and it sold off the hardest with this. So you would expect, as the market has started to recover, that if you bought in the tech stocks, that you'd be seeing the most gains. And I think most people are. And really, just intraday, day hasn't ended yet, but nothing has really happened today. Just kind of a flat day. And I think what people are waiting on is to go back up here and test. I think today, did we just get above this? Yeah, so maybe above that first, just to see if we get above where all this started. And then if you go out to the 1 year, you'd of course be waiting to see if we can break all-time highs, which is not exactly, but somewhere. I think that put that too high, but somewhere around that level. Of course, if we do that, that'd be a pretty bullish sentiment. But you can see right there, big picture, just these crosses, death cross, and now you're having the bullish cross starting to happen. You can really see the pop with this. And today also I noted, I wouldn't pay a ton of attention to yet because I don't think the market has made a decision in the fact that the volume right here is 32 million. And if you go to the average volume, it's like 76. So underneath, of course, you know, times 2, that'd be 64. But so we're underneath half of it right now. So not a day that I'd pay a ton of attention to. I would kind of wait, but this bullish cross, like, I mean, we could pull back, is what I'm trying to say. Like, I don't think we're just going to fly up because this green day is just barely moved and no volume. So really, I wouldn't expect that to continue tomorrow. So not telling anyone else what to do, but me personally, I have a strangle because I think that we would have a bigger move. I'm not sure which direction it would be yet in the short term. But you're starting to see this, so for long-term plays, like for me, I'm feeling a lot better about some of the mutual fund holdings and long-term holdings that I have, and if we can hold this, you would think we're going to go up and break and set new highs. But so that's just kind of a quick recap, not just of the day, but like overall what's been going on in the markets, and how I've played stuff in the past and how you can recognize this, and a lot of the ways that a lot of people do the swing or like longer term trading. And also, if anyone like the Fed, you know, with their announcement that they made, my guess is recently helped this. And so I'm not going to explain how to do that in this video, but if anyone wants to like know about some of the Fed stuff and how they generally affect the market, just let me know, say something to me. I can try and do something about that. But what the Fed has done recently has generally probably had a big impact on why we're getting this move up, but it's definitely helped with the stop down as they've stopped wanting to move up rates, which are generally not good for the market. Anyway, hopefully that helps you all. Like I said, if anyone wants a different video on anything, just let me know.